What is going on, fellas? Welcome back to Debit Credit Nation. And today I bring to you another exciting content in SAP Convergent Invoicing and Financial Accounting Contract Account Receivable Payable. So many of you have requested or DM'd me for a video on intercompany transaction or cross company code transaction. So today we're going to learn what is intercompany transaction, how this can be recorded in SAP BRIM. So we are going to talk about the posting side of it. That means what things are done in the convergent invoicing and the FICA side, not about how is it done in SOM or CC. So let's understand what is an intercompany transaction. So uh, first we'll understand in an Excel the concept of intercompany transaction. So for intercompany transaction, what happens? There is a group company. For example, say Tata Group of companies. This is a group company, and this group company may have multiple children. For example, if I talk about Tata Group and companies can have Tata Consultancy Services as a company code, then Tata Steel can be a company code, then Tata Motors can be another company code, and say I'll use one more. Say Tata Power is another company code. Tata Consultancy Services, what is their main business? Their business is to provide IT solutions. You all know. Tata Steel, they are into manufacturing of steel, iron and steel products. Tata Motors are into automobiles, four wheeler specifically, and Tata Power are into generation and distribution of utility, electricity, gas, etc. Now, each company code has their own line of business, but sometimes it may happen that although they have their separate customers, but they may take the service of each other to produce the final goods. For example, I used to work in TCS till 2019. So what happened? They used to provide us pick and drop services. If you go to office before 6 a.m. in the morning, or if you leave office after 11 p.m. at the night, then TCS will provide you pick and drop services. And from where it used to take the services, it will require automobiles, it will require drivers. So they used to take the help of Tata Steel. So whatever cars Tata Steel produced, which are unsold, or maybe they keep some vehicles for their internal use. So those vehicles which are not sold outside are being used by TCS. So what is happening? TCS is providing IT services to their clients. Say TCS is providing IT services to, say, YouTube. YouTube is the client of TCS. Now to provide this is the end client. Now to provide this IT services, TCS would need their resources to come to office at maybe 2 o'clock, 2 a.m. in the morning, 3 a.m. in the morning due to client requirement. After a long day of work, the resources will go back home at midnight. So for those times, TCS will take the services of Tata Steel. Now to deliver the end customer, deliver the services to the end client, TCS will consume service from Tata Steel. Sorry, I'm not. It should be Tata Motors. My bad. So TCS will consume the service of Tata Motors, the vehicles, because Tata Motors will have vehicle, and those vehicle can be used by TCS to pick and drop their employees. So this is, since TCS and Tata Motors, both of them belong to the same group, Tata Group of companies. So this is known as intercompany settlement. Why? Because for TCS, whatever amount TCS is paying to Tata Motors for pick and drop services, that is an expense of TCS. So for TCS, it is an expense, and for Tata Motors, that is a revenue. If I consider the individual accounting statement of TCS, it's an expense. For Tata Motors, it's a revenue. However, for Tata Group of companies, this expense and revenues are knocked off. That is, there is no income or expense in the books of Tata Group of company. Since both of them belong to the same group of company, that's why we call it intercompany settlement. If TCS would have taken the services not from Tata Motors, but from, say, TCS consumes the services from Maruti. Okay, that is, TCS buys those vehicles not from Tata Motors but from Maruti. In that case, this would not be intercompany settlement because Maruti and TCS are not part of the same group of companies. So this would have been purely for Tata Group of company. This would have been pure expense, and for Maruti, it would be a revenue because they are separate. So here also we are going to create a similar scenario for intercompany settlement. So for intercompany settlement, so we talked about, let's take this off. These two company codes we don't require since we are talking about TCS and Tata Motors. So in SAP's world, in BRIM world, this is called requesting company code. Okay. And this is called supplying company code. So requesting company code would provide the service to its end customer, but for that service it will consume some services from the supplying company code. What will be the accounting entry in the books of each of these customer? Because that is the main part. Whatever way you configure, your accounting should match. Whatever your client is requesting, that accounting should match. For requesting company code, there will be two accounting entry. First accounting entry for the end customer, for the regular sale. So for this, I'm ignoring tax for the moment. So for regular sale, the accounting entry is customer, debit, and revenue, credit. At the same time, there will be an intercompany transaction. Couple of intercompany transactions here. So interco settlement. Okay, what is that entry? So for TCS, it is an expense. So for TCS, the accounting entry will be purchase slash expense debit and intercompany payable credit. Why? Because for TCS, it's an expense that they have bought and did not pay yet. So this is the invoice. Okay, TCS will get an invoice from Tata Motors. The requesting company will book an invoice. In the books of requesting company, it's a payable. But in the books of the supplying company, it is a receivable. So it is interco receivable debit and revenue slash income credit. Okay, so three accounting entry will be there. This we would have booked irrespective of there is intercompany settlement or not. That is, if TCS consumed the services from Tata Motors or Maruti, this entry we would have to book. Anyways, this is regular sale. Now for intercompany settlement, this additional entry it will book. So if there is no intercompany settlement, that means if TCS would have consumed the services from Maruti, it would be purchase or expense debit and Maruti credit. And in Maruti's book, it will be TCS debit and revenue income credit. But since in the books of TCS, Tata Motors is an internal entity. So instead of crediting Tata Motors, I am using interco payable. Okay, because this is an within the same group. That's why you are using interco. And here it is interco receivable. Again, for Tata Motors, it is not debiting TCS because TCS is also forming a part of its own group of companies. Okay, I would show in case it has taken from outside what will be the accounting entry. It will be purchase expense debit and Maruti credit. And in the books of Maruti, it will be revenue income credit, debit will be TCS debit. Okay, here the companies would debit their respective names because they don't form a group. That's why they can book them as a debtor or creditor. But in this case, they cannot book them debtor or creditor because they are part of the same accounting entity. Okay, now let's create this scenario into SAP BRIM. So we are going to use, instead of TCS, I have created a company code. The requesting company code is 0704 company code and the supplying company code is 2409. Okay, so before I start, let me show you the company codes here. So I have opened BRIM. I'll show the org structure first. So first 2409, if you go inside 2409, this company code is part of SOU, that is show group of company code. So I have created with my name. So show group of company code. So just understand that show group of companies. This is like Tata group of companies. Okay. So 2409 is 2409 in my example is equivalent to Tata Motors. Okay. So it is part of show. Similarly, and this is a supplying company code. Similarly, the requesting company code is 0704, which is also part of show group of companies. So in this case, 0704 is my TCS, that is requesting company code. Okay, so let's book the accounting entry. So first accounting entry will be the regular sale, the one that I have shown here, customer debit and revenue credit. So first I'll book the accounting entry for regular sale. No brainer, this is simple, that you have already done. So I'm booking it from, without getting it from CC or SOM, just booking it directly here. So this is the regular sale. So I'm booking a regular sale of say 45 $45. Two bits are 0704 and 0705. The bits are installation and recurring fee. Okay, 2 bits it is recording. Execute. Bits are generated. Now the bits will be billed. Billing document is generated. Now I'm going to invoice. No change here because this is straightforward normal sale, regular sale. So here we have a, I have configured if the amount is less than 100, there will be a clarification. Okay, so I'll just ignore this, continue invoicing, and invoice is posted. The accounting entry is FIAR or Joss Butler. This is a customer, end customer. Okay, Joss Butler debit and sales revenue credit. Simple. This is equivalent to this one. Okay, regular sale done. Now next I'm going to book the intercompany sale. For the intercompany sale, what I have to do is I have to do some tweak in the bit generation. So /o AC38, I'm generating the bit. However, I have created a separate variant for interco. Okay, so this is the interco. Now again, I'll change the reference. So bit the regular invoice I generated worth 45. Here also, I will generate the intercompany with 45. Okay, so $45, same recurring and installation, generating the bit. Now here, the bit is generated. However, in this bit, I have to make some tweak. What is the tweak? The bit does not have intercompany related attributes. When you have a live system, you have to build this via event 10 or event 5. Processing of billable, enrichment of billable item, you know, there is a config. In that config, you can enhance event 10 or event 5 where you will add the bit related attributes. So here, instead of doing it there, I'm going to edit the standard table and I will put the bit related attributes. Okay, so what are the attributes? Refresh. These are the 2 bits. Okay, so this bit will require intercompany settlement type. So I have configured IC01 as my intercompany settlement type. This you have to populate via the event. Next is synchronous or asynchronous. So I have configured synchronous offsetting entry. Synchronous offsetting entry meaning the intercompany invoice gets generated right away. Asynchronous meaning it will generate separate triggers. Okay, so I have chosen synchronous in the configuration, that is in one shot intercompany transaction will get generated. Intercompany meaning I have to book transaction in the books of both requesting company code as well as supplying company code. So here I'll put the requesting company code. In my example, 0704 is my requesting company code. 2 bits I have entered, 2 line items. And for the supplying company code 2409 2409. Okay, 2 separate bits I have populated: requesting company code, supplying company code, in intercompany settlement type and intercompany settlement process. Okay, then I'm going to save. These fields I am adding manually, but in an integrated system, when the items are coming from CC, you have to configure it. Either CC should pass it or you can configure it using the bit enrichment event. So this is done. Now let me find the bits. /o fkk bix bit underscore mon. So I want to find, so 1002 billable bits which is generated today. Okay, execute. These are the 2 bits and you check Go to the right hand side, you check the intercompany settlement type and intercompany settlement process are also populated thanks to the table edit that I did. Select both of them and bill it. For billing, I have configured a separate IC01 sub process, which is this is my regular sub process. This is my related party transaction, that is intercompany sub process. Okay, so I bill it, open the billing document, and go to the end. You'll find that the intercompany related stuff or attributes are carried over to the billing document. Only if it is carried over to the billing document, then my invoice will have the intercompany posting. Okay, in my previous billing document, the regular sale, let me open the regular invoice. This is my regular invoice. If I go to the billing document, my billing document, I go to the right hand side. See, these intercompany attributes were missing because this is regular sale. Okay, now I'll go back to the invoice here and we'll resume the invoicing of the intercompany posting. So billing is done. Now I'm going to invoice it. Go to invoice, invoicing process. No need to change the invoicing process. Same invoicing process for regular sale can be used here. Clarification warning, that's fine. Continue invoicing. Document is posted. Now invoicing is posted. If I click on the invoicing document, in the line item you see third and fourth, two separate line items are generated. These line items are for ICO, stands for intercompany settlement. Okay, so you see 4545, another 4545. Okay, two entries are there. Now go to the posting document and we will validate the accounting. That is very, very important. Whatever configuration I have done is for intercompany settlement. We need to make sure that the intercompany settlement posting is working fine. So first I'm going to open the first document, 1750. It is in the books of the requesting company code, that is TCS. Okay, so what was the accounting entry in the requesting company code? It is purchase or expense debit and intercompany payable credit. Because for this it is an expense and it is a credit purchase, the creditor settlement is needed. Okay, although the creditor is insider, but still it's an intercompany payable. Now if I open the document, it is purchase intercompany 90 meaning 45 plus 45. So purchase account debit and credit is intercompany payable. And here we have, see, the ARGL, the balance sheet GL has hit a separate GL. For a regular sale, where did I book? This is a regular sale. I booked it in AR FICA AR. Okay, 18 series GL. Here I booked the regular sale. The receivable of regular sale is 18 series GL. However, the receivable GL of Interco is 14 series GL, separate GL. Okay, so the accounting entry is purchase intercompany, that is purchase account debit, and intercompany receivable payable. I created one GL, and here the text is the this master data. We have to create master data. Two master data I have to create, one for each company code. Okay, so this is a master data. So when I open this 0704 Interco, okay, my previous regular invoice, which master data I used? Joss Butler, end customer I booked. But here for the intercompany, I am using the Interco for 0704. Separate master data, separate contract account. Okay, intercompany payable, separate contract account. 1002, separate contract account. And the separate GL account is used. So two lines. First line is for installation and second line is for subscription. Okay, that is recurring. So this is my accounting entry in the books of the requesting company code. Purchase account debit, intercompany payable, intercompany, see it says intercompany payable credit. In the books of requesting company code. Similarly, it will create one more entry in the books of the supplying company code. So supplying company code here 2409, you see in the books of 2409, the accounting entry is interco receivable. The same interco receivable payable GL I have used. So interco receivable, again I have created a separate business partner. Okay, separate business partner and separate contract account. Okay, now the thing is, this accounting is in the books of 2409, and if you see the company code, it is created under 2409. Okay, separate this is AR, separate AR I have recorded, and it is also installation debit and then subscription debit, and offsetting entry goes to sales revenue intercompany. Intercompany receivable debit and sales credit. Okay, again I have used separate sales GL here. You see, this is sales revenue for intercompany 41 all 099, but for regular sale I booked 41 all 07614. This is regular sale. Okay, B614, this was my bit class. So this is my regular sale. For regular sale I book a separate GL, sales revenue GL, but for my intercompany sale I use a separate sales revenue GL. So this is how you can book intercompany posting. If you want me to create any other video on any other topic in CI or FICA, please let me know. I will definitely create. Thank you so much. Keep supporting David Kate Nation. Signing off. Bye bye.